Well, good morning, everyone. Welcome to our Wednesday morning trading session. Hang on here for a moment while I get the screen share going on. So we just saw the markets open. Pretty relatively soft open, really. Trading left off yesterday here around the 51.78 area. Very, very quiet. You can see through the Asian and European sessions, and we're opening maybe just ever so slightly below there. Nothing significant, not like a real big opening gap or anything. It does appear as though we may have had a test of the extreme in the overnight, and now we're breaking below the lows. So I wonder if that's going to hold, and we're going to see the NASDAQ slip lower today. Here on the Raptor, we actually have an early signal. We have the cloud crossover signal, and I'm surprised that one is printing as early as it is. It's just a few minutes into the session, so if you wanted to take this signal, I would probably suggest taking it below the low, not taking it on the hash mark, just because, like I said, we're only a couple of minutes into the session. It's going to be easy to get stuck on the wrong side of the trade as traders are just sorting themselves out a little bit here. The E-mini opening with a little bit more of a downside gap. Here now the E-mini on the Eagle, and you can see that yesterday very quiet, very subdued. Trading letting off just a little bit higher here around the 22.87 mark and opening down here around 22.83. So we've got a 3 or 4 point gap. Nothing serious, but we may see the market trying to trade in there all the same. And crude oil also kind of sideways. Here's crude oil on the Falcon. Yesterday, very, very bearish day for crude. Today, the market reacting a little bit to that. We're working on a possible trend change signal here. We don't have the completed signal just yet, but it does appear as though crude has a slightly downward bias to it. Okay. A little bit of a macro pullback. All right, what time is it? Oh, we're only about 5 minutes into the session. Here's our macro pullback signal. Just tripped. I'm a little bit late on it. Let's see if I get a chance for a second push. Are they going to give it to me? No, it's a little bit slow there. All right, so here's the second push now on this macro pullback signal. I'm really quite late on it. Oops, wrong button. Now what I'm going to do, because it's the first signal, I'm actually going to try to run this one out. I'm going to see if we can't get any momentum here. Here on the Raptor, we're coming back on this number one signal, so you do have an opportunity on the Raptor as well. It's the same kind of trade. Just making a couple notes here in my trading journal. All right, I'm going to cancel the Raptor order now because we haven't engaged it. So we'll close that one out. Daniel is asking what happens if both sell orders were executed, the one here in the Hawk and the one here in the Raptor. Nothing really, because I have them on separate accounts. If you have all your trades linked to one account, then you don't need to duplicate the order. You would end up having more contracts in play. Yeah, Russell says lots of signals in a cluster. It's definitely a little bit of a sideways type mess that we have going on, isn't it? You can see the Hawk, for instance, here, lots of signals on the way down, kind of a trickle follow through, nothing really substantial momentum wise. And then we came across with a 4-arrow consolidation. I wouldn't really consider it a 4-arrow consolidation in the traditional sense, because usually a 4-arrow consolidation is simply like a little bit of a pullback phase. This just, while it's a pullback, it just looks like the market is struggling, which it certainly is. All right, we need to see the sellers make a strong push now, and then I can bring my stops in a little bit. Come on. Let's try to take out those lows. And they're trying. Lots of support down here around the 1 or 51.69 half, 51.70, 71. Every time they get down there, it seems the market trying to push it back up. Let's see if we can actually break through this time. I would love to get one more bar lower. That would make it much easier to roll my stop. But we got to get through this 51.71, 51.70 area. There we go. Come on. All right, so I will roll my stop in a bit. Okay, now the big hurdle, the low of the morning, 51.68 half. Let's go, sellers. Come on. Ay, 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 ay. All this sideways trading. What we've got essentially is a little itty-bitty trading range. If you were inclined, you could use your OCO order and place orders above and below. Let's take a look here. Just as on the Raptor, as an example, you can do this with any of your charts, but you could use your OCO function and you could sell below, buy a breakout above. So what I'm looking for is a breakout below the 51.69 region. I'm hoping that there's going to be a bunch of sell orders here from the buyers that tried to buy it up. If that's the case, it would be what is referred to as trapping traders. Wow, lots of support down here. So we're either going to get a strong get a strong breakout. I'm hoping we're not going to see too much bearish reaction or bullish reaction. Okay, we got a little bit of follow through there. This is what you expect, is that, oh, see, now we have that problem again. Come on. Doggone it, give me a little bit of follow through here. I didn't want to roll my stops to break even just yet. Okay, I'm going to take the trade to break even. We'll see. This is going to be really dicey. Come on, push hard. Where's Ray Burke when I need him? I need him to come in and go with his push. Darn it. All right, well, I took a break-even stop out on that. Let me just make my notes here. Oh, sure. Now they trickle lower. Stinkers. Clayton is asking, how did you highlight that OCO range? Which one is it now? No. Oh, this one right here. Rectangle. Control F12. And I just changed my colors, that's all. From the defaults. So, turns out I was a little bit quick with my stop on that. But it's early. Now that it seems we have a little bit more direction in the market, we can look for another opportunity to get short. Okay, we've got a couple signals here, just our basic Falcon signal right here. If you were just looking for a place to get on board, you could do a second push on this particular signal. The challenge here, as always, is trying to keep your stop out of harm's way. We have the same signal here on the Raptor, even though we don't really have a name for it. It's just a continuation signal. Okay, price is retreating a little bit from the signal. I'm going to close that out and we'll just wait. Wait for a better opportunity. Yeah, Clayton, you're right. Clayton says you were just a little too quick with your stop, and that happens sometimes. If I have a problem, one of my problems, and we're all unique in this respect, but one of my problems is I do have a tendency to tweak my stops sometimes a little bit too quickly. And thanks, Floyd. Floyd's reminding us that their crude inventory report out at the bottom of the hour. Great question slash comment here from Floyd. Floyd asks, a lot of the time the first signal seems to be a head fake. Would you recommend waiting 15 to 30 minutes after the open to start trading? I know you'll miss the huge open rally, but they seem rare. Russell, a little while back, alerted me to the first in-sync eagle signal. That tends to develop about, I don't know, 3, 4, 5 minutes into the session. And it seems to have some pretty decent follow through. We had one here. This is the one from this morning. We're still working that one. Where was the first in sync one? I guess right here. That was a little bit of a jumbled mess. That came well into the session. And this one occurred right here. So most of the time, that first signal works out or will eventually work out. Not all the time, of course, but most of the time. And that tends to print about 2 or 3 minutes into the session. Now, having said that, by and large, I tend to avoid the opening range. I have found that the signal that prints about 15 minutes into the session is really that one that's that head fake signal that you were talking about. In fact, if it wasn't for everybody expecting the room to open at the market open, if I had my druthers, I would open the room a half hour into the session. But then we would have everybody asking, well, why aren't you trading the market open? Well, because, as Floyd commented, there's a lot of volatility that hits the floor out of the open, and it's difficult sometimes to get your bearings. So, yeah, I don't see anything wrong with letting that first 15, 20, 30 minutes expire. Sometimes you'll get a feel for which way the market's going to go, even in a strong rally day like yesterday. So here's the opening range. Yesterday was actually a pretty strong session out of the open. So there's the opening range right there. First 20, 30 minutes, you still had another signal. And then you had the reverse going into the close or into the lunch. I guess it depends on yourself as a trader, but yeah, usually I don't mind letting the market print a few bars so that I can try to get a feel for which way they're trying to go today. Are they trying to go higher? Are they trying to go lower? No, no problem here, Clayton. Clayton says, can you slowly go through the steps of setting your prices with the trade manager and then making them live? Absolutely. It's pretty straightforward. So with your trade manager, you're going to, well, first make sure that you have everything set up the way you want it. So right now I've got the risk percent mode on, and I have my risk set at 2%. I'm going to do a 50-50 split on my trade, which means if I run more than one contract, I'm going to take half my profit at target 1. I don't have target 2 or 3, and the other half of my position will be a runner. Target 1 is preset at 20 ticks. So let's say this is the signal I want to take advantage of. I'll click Set Prices, and I'll go down here. Let's say I'm going to take it right on the hash mark, and I will click for my entry price. Now you need to settle on where you want your stop loss to go. Let's say I want my stop loss to go here above the median line on the support and resistance suite. I simply click there, and now I have my stop loss order. Trade Manager automatically calculates my 2% risk, and it says, okay, Eric, for this trade, you can afford 2 contracts. Remember, my profit target was a 50-50 split. Here I am, 20 ticks away. I'm going to take profit on one of the contracts. If everything is to my liking, I click submit to make it a pending order. All right, now this order will only go live if prices actually trade through here. And so prices traded through, my order would go live. I came down here, I hit my profit objective. So I would have taken profit on one of my contracts. If I were running an auto break even, the trade manager would have rolled my stop down here to break even now, and I would have been stopped out here. Otherwise, I would still be managing one contract, one open position. So I'd have profit on one, and I would be managing the other one. So it's 3 clicks, essentially. You set your entry, you set your stop loss, you hit your submit button, and then you've got an order in play.
Order canceled.
All right, well, so much for a bearish session. Everything's kind of flip-flopped, and now things are starting to look a little bit more bullish as we've pretty much recovered where we started the day. Okay, so Jeff is asking you, you risk $390 per contract to make the $100 runner. No, it's not per contract, it's $390 total. That's my total risk. If I went all in, all out, let's say I changed my profit objective to 100% at target 1. I would be risking $390 to make $200. And then as the market drifted lower, I would have hit my profit objective. Now, if I had set my stop closer, let's say I placed my stop here, note what has changed. My risk amount hasn't changed. It's still $390, but what has changed? Oh, now I have 3 contracts. By placing my stop closer, the risk doesn't diminish, the risk stays the same, but my profit increases. So instead of a $200 profit, I could have made a $300 profit. If I placed my stop right here, again, the risk 2%, so in this case 360, but close enough to 390. And now I could have made a $400 profit. What changes is not your risk amount, but what changes is your profit and the probability that your trade will be a success. The market's been bouncing around a little bit here. Now we're brought in. What is the likelihood the market may react and stop us out before heading lower? Well, I would probably say it's like a 50-50 bet, maybe even a 60-40 bet that we're going to see a little bit of a reaction here on the breakout. So to my way of thinking, I don't want to have my stops really, really tight in case there's a little bit of a hiccup here. It's like that game of tag that you play as a kid. The objective is not to get tagged. So if that's the case, I should leave my stop a little further back. All All right, what do I think the chance is that this stop will get hit now that the market is broken out? Well, we saw prices, they were floundering a little bit. There wasn't a whole lot of follow through there. Again, maybe 50-50, maybe 40-60. What is the chance that this stop will get hit after the market has broken down through here? Well, now I think we're starting to skew things a little bit more in our favor. 40-60, maybe 30-70. The chances are it's not that likely that this stop will get tagged before the market has a chance to hit our profit target. What about this stop? What is the chance that this stop will get hit before the market can find our profit target? Probably not very good. Probably maybe 10% or less, 10% of the time, that stop will get tagged. So, yes, I've decreased my profit potential each time I rolled my stop back, but I've also increased the probability that the trade will be successful. So that's the trade-off you need to make as a trader. That's your decision to make because obviously it's your money. Do I choose to keep a tight stop and look for more profit and accept an early stop out if the market moves against me? Or do I keep a looser stop and try to get to my profit objective, or give the market at least a chance to get to my profit objective? You see, my way of thinking here is, okay, the market comes down, starts moving higher. Well, we know there's been reactions up here, right? So that there's a really good chance that the market is going to react at least one more time. But I don't want to get stopped out if the market just goes a tick or two above this high. Therefore, I leave it a little bit further back. If the market does give me this reaction, well, now I can take my stop from here and roll it down to here. And if it heads lower, I can roll it again. And let's say there's another reaction at this point, and the market comes up and stops me out. Okay, I got stopped out, but it was what I would like to call a good loss. Yes, I lost money. I probably lost maybe a little bit over $200 or about $200 on this trade because we're about halfway between our original stop and where we got stopped out. But it's a good loss in that I gave the trade every opportunity of success. Had I placed my stop, so here's my signal. Had I placed my stop right here to start, I know it's hard to see. It says $400 and 8 contracts. This would not be a good loss because I've placed my stop so tight that I can't allow the market any wiggle room whatsoever. Now, maybe you've determined that the market is just going to make an insane run lower because you can see very often we'll print a signal and there isn't a whole lot of hesitation, right? You print the signal, the market goes. If you feel you found one of those times, then by all means, max out your earnings. But like I said, I would not call this a good loss because I got bounced out on the first little hiccup. This one, however, is what I would call a good loss because I gave the trade every chance to get to its profit objective, and it just chose to do otherwise. Now, a lot of times, you're going to find that if you keep your stop deep enough, almost every trade will become a profitable trade. It isn't always practical to leave your stops that deep, but let's take, for instance, this number one signal that I printed here. If I had my stops up here, and let's pretend for a moment we didn't hit our profit objective, or that my profit objective was lower. Let's say my profit objective, we'll select one. So we're going to enter that signal right there. We're going to cover above the high. We're going to use down here as our profit objective. Okay, we haven't hit our profit target yet, but we still got a lot of room. This is a pretty significant high. What do you think is the chance that we're going to see one more reaction before the market tries to take out this high? It's probably pretty good, I would say. Probably pretty good odds that at least one reaction as the market drifts higher. The market is definitely looking more bullish now. I should stop talking and start trading. Oh, darn. Nice little first micro macro cross and a trend change signal to boot. Oh, Jeff. Jeff says, I've got the trade manager, but it's always seemed like too much trouble to learn to use. It really isn't that difficult of a tool. You just need to play with it for a little bit. Do yourself a favor. Learn to use it. People think I'm making this up when I say it is perhaps the most important piece of trading software to your trading success. The key is this function right here, the risk percent mode. I know it sounds too good to be true, but honestly, it keeps you from blowing yourself up. Jeff asks, even if you trade all in for all contracts? Absolutely. I usually go all in, all out. Sometimes the first trade of the day I'll try to run it out just because I'm looking for some early momentum. But most of the time, no, I'm all in, all out. About the only time you don't need Trade Manager, well, and even this is a bit of a stretch, is if you're trading a small account and you can only afford one contract. But even there, what it's going to do, and I'm going to dial this down here to simulate a smaller account, what it's going to do is it's going to prevent you from taking trades you cannot afford, which is equally as important because people blow themselves up, blow up their accounts by taking trades that they shouldn't be taking. So let's say you're taking a look at this signal, and let's say you want to place your stop up here. Oops. Let's go with our presets. You want to place your stop up here. Trade Manager says, no, sorry, Eric, you can't afford that. All right, so what do I need to do? Well, I either need to select a stop that's going to be a little bit tighter, or I need to risk a little bit more of my capital. So if you're trading, say, a $10,000 account, you're routinely going to have to risk more of your capital. It's just going to be a fact of life. Instead of risking 2%, you're probably going to have to risk 3%, and on occasion, probably even 4% to get a trade on. But again, you're going to be playing with the probabilities, right? If you're, say, have a 4% trade in play, but it allows you to keep your stop up here, that improves your probability. The chance that your stop up here is going to get tagged is not that good. It's pretty remote. Yeah, Jeff says, I'm getting interested in learning it after watching you. It's worth your while, it really is. It is a very, very sophisticated piece of software. Very powerful. Clayton asks, shouldn't you be in the mini market at that amount if you're trading, say, a $10,000 account? Yes. A market like the Spider, if you're looking at ETFs, you've got your gold and oil and stock market derivatives that you can trade. They give you more control. The NASDAQ isn't bad because a lot of times your broker will give you day margins, which will be around $500. And you can see that a lot of times you can put on an NQ trade. Again, I'm going to dial this down just to simulate a smaller account. But you can place a stop. Oops, okay, that's a little bit out of reach. You can still place a $200 stop on a $10,000 account and give yourself a reasonable trade. These little winners will add up fast enough. People think, they look at that, and I'm guilty of this too. I look at this and I say, $50. It's not worth my trouble. Like if I were walking down the street and I saw a $50 bill laying on the sidewalk, I wouldn't stop and pick it up. Can't be bothered. But people don't do the math. And like I say, I'm guilty of this myself. If you do a $50 trade twice a day, only two $50 winners. So let's see, there's one right there. And we had the macro pullback back here. All right, so there's one $50 trade. Here's the other $50 trade, the first micro macro cross higher. Okay, so I've made $100. If I do that every day, I'll make $20,000 a year. On a $10,000 account, you make a 200% return. That's pretty darn good by anybody's standards, because the beauty of it is, after that, it becomes a numbers game. You don't trade more often. You don't look for more opportunities. You just increase your trading size. So now you're trading a $20,000, $25,000, $30,000 account. Yeah, all right, well now your trades are starting to look like this. So you take your signal back here. All right, you made 150 on that one. And then you come back here. And now you made 100 or 150, $200 on this one. So now you're making between $300 and $400 a day. So you're making another $60,000 to $80,000 a year. If you can do that every single day, just finding those two $50 winners. 80, $80,000 a year, that's not bad. I don't pay a few bills. And then if you get yourself to the point where you're trading 10 or 15 contracts, well, then it's time to perhaps move over to the S&P. Sure, Tony. Tony asks, Eric, can you show me how to create a second SIM account? Where do I go to do that? Is it down here in Utilities? No, it's not that. Oh, Options. It's the Options window. And then you go here to your simulator, and then you go to your accounts, and then just give it a name. Name it whatever you want. Tony's SIM account, and then press save. So under the tools, you go to options, and under the options, you go to your simulator tab. And then from there, you click your accounts, and then just name your account, whatever you want to name it. Click save, and you're good to go. Well, we got a little bit of a run up. Now we're pausing again. Oh, maybe we'll do crude oil on the Raptor. So, crude oil getting close to inventory. Kind of a smallish sideways session. Now, normally what I do is I bracket the market higher and lower. Today, however, I think I'm only going to take a look at shorting. And the reason for that is the long-term outlook for crude oil. All right. And for that, to show you that, I'm going to need to make a daily chart, and I will show you what I'm talking about. 1 second. All right, here's crude oil now on a daily chart. 1 second, let's smooth this out a little bit. If you didn't know this already, there's 1,440 minutes in a day. So to get rid of some of those gaps, you can go to a 1440 minute chart. All right, so here's crude oil in a little bit of a wedge type thing, and we broke into the short side. Yes, it is possible that we're going to see a reaction here, but it seems more likely to me that crude is going to continue lower. Therefore, I'm going to favor a signal to the short side. We've got this, a couple big bear bars right there. You can see it's happened before. We got bear bars and the market reacted and consolidated and moved sideways. But I think it's going to be a little bit safer to try to short crude today. That's my way of thinking about it. So that's what I'm going to look for. And I'm going to swing for the fences here. Let's go for it. So I'll enter below here. Oh, I should use my stop limit as well. And I'll only allow the market to slip me a couple of ticks. So I'll enter below there. I'll place my stop above that little swing high, and I'm going to go down here for the primary support. That's going to be my profit target. How are we doing? A couple minutes to inventory. So I'll leave that in play, and we'll see what we get. Very, very neutral bar. Of course, you can still bracket this if you want to do the bracket trade. This is a very sideways market. There's today's range, not even today's range, smaller than that. There's today's range. So it is a very, very sideways market, and there's certainly nothing wrong with buying a breakout higher. Oh, stop strategy. Almost forgot. Okay, I'll go with the ATR stop with the default, and we should see inventory release in a moment. They're gearing up. Look at our little bid-ask bar going a little crazy there. This trader's trying to position themselves. There we go. Okay, so they're testing the top end now. Not much of an inventory report. Just taking a look at where we're coming from. Yeah, yeah. Tony says, I remember the days when you'd actually start to perspire at inventory report. Yeah, isn't that the truth? Yeah, everything's just kind of fallen flat. All right, the buyer's trying to press it up. We made a higher swing high here. They're holding the lows. Oh, Clayton says inventory is way above forecast. Well, there we go. So prices should come down. Well, let's see about that. So what I've done with this is it's essentially a bracket trade, but I've only bracketed one side of the trade, the short side. Yeah, Clayton says, see, I told you. It looks like it's the Saudis there fighting the drop. I'm going to roll my break even just a little bit. Going to hold my stop there for a moment as well. Come on, don't look too far back. We got to see some active selling here and in a hurry.
Order canceled.
Well, there you go. There's crude oil for you. Not convinced that I'm on the wrong side of that equation, but the market just very content to move sideways, it seems. Um, all right, boys and girls, we're going to close up the room here in a few minutes. Today being Wednesday, I've got the open house to host at the top of the hour. So we'll just see if anything unfolds here in the next few minutes. Oh, looks like we might get a cloud crossover signal here in the Raptor. It hasn't printed yet. We just got the warning dots. The whole signal parameters haven't been met, but we'll see whether we come back with a buy signal there. We are getting a trendline touch signal here in the Falcon. And of course we have the macro pullback here in the Hawk. Okay, prices may try to pull back a little bit deeper, maybe get into this hard edge and then come out and give us another buy. It is looking, though, as if the market is going to be a little bit more bullish today than bearish. I wonder if this is going to be the last rally. So here we are now on the Falcon with just your basic trendline touch signal. The signal will probably print here. Yeah, there it is. I'll either look for a second push or I'll take the signal above there.
Order pending. Order pending. Order canceled.
And I've canceled my profit order just to see if I can't get a little bit more out of this one. I hope. Okay, so we've hit our break even and what would have been our first profit objective. I guess I can take steps to roll my stops in a little bit here. And you can see because the programming has hit the auto break even, I've already, my stops automatically roll to the break even point. Come on, get up there. How are we doing so far?
Order pending.
I'd love to hit the second zone as a profit target. Come on, buyers. All right, well, I'm afraid I'm going to have to close out of this position and get ready for the presentation. So I'm sorry to have to rush off, but if you are still in that trade, I think you can hold it a little bit longer. I think we're going to see a little bit of a run up there. There we go. And possibly get to our other profit objective. All right, I will see you again. Oh, sure, now you guys put it in gear. Stinkers. All right, I will see you guys tomorrow, and we'll spend a little time on some Raptor trading and then hopefully do some trading as well. I'll talk to you then. Bye for now.